So hello and welcome. Welcome you to this special webinar today here for exclusively for JFD Brokers, a live trading session. By the way, I just completely forgot to open my slide here. So here is the slide and here is the presentation. The good thing about this is that we can get an overview here of 1 second. Okay, so it's for the agenda for today. So it's the fourth part of this series, and so far it has been a great success for us. I think so. Plenty of very great feedback we received here, and today will be the last part of this series. Even though we'll have a very spectacular topic today, so it's on momentum trading, trend trading in general, and my way to trade momentum, respectively trends, and then Stefan will give us some further insights behind the scenes. First of all, the risk disclaimer, very important. So if there are any trades you will see here during this event, or if there is any setup given or something, please always remember that trading foreign exchange and CFDs on margin carries a high level of risk, and that the discussed products may not be suitable for all investors, and that you please ensure that you fully understand the risks involved. And now let's come over here to the agenda. In fact, by the way, I don't have to. Okay, yeah, sure. I'm sorry. I completely forgot to introduce Stefan, by the way. Hi, Stefan.
Hello from my end as well.
Again.
So we have a little bit technical issue
have
today.
A look at the agenda, please, Stefan. Say something.
Yeah, no. But anyhow, a warm welcome from my end as well. So, yeah, as Jens already introduced, last topics today, but great topics, and you will see. And finally, I will do a performance update on all we have done during the last three webinars and show the performance of the mentioned strategies. So, be curious.
Okay, perfect. So thanks a lot. And yeah, so in fact here, the agenda, trend following and momentum trading, the basics, in fact. So I want to say the following. So when I trade trends, respectively, when I trade momentum strategies, then usually I tend to trade them on a very discretionary approach. In fact, it's the entries in the market are in fact given at the beginning. So I exactly know what I want to trade. So if I want to trade an open range breakout, for example, or if I want to trade, let's say, a topish structure forming based on a sentiment extreme, however, and these are setups I then just trade, and then based on that I build further positions to my current position, building a pyramid, for example, or also managing the stop in such a manner here, and for example, using a super trend indicator as a strategy to exit trades here. And so in fact, what I just want to present to you here is how can I say that? What I want to present to you is the basics behind this. So how do I identify a trading setup, for example? So in fact, as you may remember, here that was the open range breakout setup. So probably let's just take this setup here, and then based on that, get an idea of how do I identify the overall advantage, and then we don't go in further details here around the open range breakout setup, but instead we work with this here, with this chart. By the way, I think I promised that I will have changed this. I'm about to change it right now. So I'm in the same section here with my educational piece. I'm working out in English, and I still have not found the time to adapt this, but it's very easy to understand. Obviously, you have an uptrend here. The same goes for a downtrend, and you have and then a so-called accumulation area. It's in German it's Ursachenbereich. Accumulation area, that's the region where you try to build a position in anticipation to higher highs here. And by the way, this is crucial in terms to understand the basics, but also my personal approach here, discretionary approach to position myself in trends and try to profit from momentum here. And then you try to get rid of these positions here, usually in the so-called Wirkungsbereich. This is the distribution area. So it's purely market structure we're working with here. And so this is in fact the chart I'm using here, or the basic I'm using here to formulate a momentum approach. So, and that's something I'd like to present to you here. So, okay, so what we'll do here is the following. So we have an uptrend. Let's say we can see this structure, for example. And once the market has at least two highs, relative highs here and relative lows, and has made it to new highs, there's obviously a trend structure developing here. And now the thing is that what I do is to profit from this trend developing here, respectively the momentum. So this is, by the way, something interesting. So there's probably two things you can do here. You can say the trend itself, well, that's not so good. 1 second. 1 second. That was not. That was my smartphone. I'm sorry. So here we go. Okay. So what we do here is the following. So we could easily trade the trend, higher highs, higher lows, but we can also try to trade the following here. So we can trade this one. And this is something I'd call momentum here. You try to profit from the current momentum, but you only try to trade this piece of this trend structure. So this is the difference I'd make here, saying a trend approach here tries to profit from higher highs and higher lows, and based on that, you try to position yourself in the market. While if you trade such a momentum approach here, you try to profit from the so-called progression. So what you see here is that the progression is obviously yeah, you try, this is like the fillet if you want. So you have the whole piece of meat here, and you try to profit from the fillet in the middle here, and just try to profit from this development here based on the current momentum. So nevertheless, the approach itself is very simple. So what I usually tend to do then is I try to and therefore let's come back to this chart here. What I try to do is I try to profit from a pullback here, since this gives me a better risk reward, which is, oh, by the way, sorry, which is happening the following way. So usually you say, if I have, and that's something I put in here, if I have such a structure, and then you say, I'll trade the break to new highs here, this is my entry point, and I place my stop here, this is my risk I have. So that's something which is okay. Nevertheless, you can have it a little better when you try to trade not the regression itself, but waiting for the regression to happen, the market to pull back, and then try to position yourself. So meaning, if I want to trade a trend here, what I usually do is I don't trade the breakout to new highs or new lows. Sometimes it happens. Nevertheless, I try to position here during or in such a pullback happening to former highs, for example, but which are not pushing us below the last relative low here in an uptrend. The same thing goes for a downtrend here. And if we get to see such a pullback here, then I try to position somewhere here. And you might recall, what is this? This is the so-called accumulation area. So this is the region where you try to buy. And now what you try to do is you try to buy it here, somewhere in this region. And if you buy it here, then the next thing is that you try to profit. If you're trading the trend, you try to profit from the market making new highs here. While on the other hand, if you position here, you also try to profit in a momentum approach here from the move developing, 1 second, developing from here, you see? So That's usually the same region where you try to position yourself. If you're trading the trend, you're getting a better risk reward. If you're trading the momentum, respectively, if you position yourself here in this region, well, this is the region you have to position yourself in, because this is the only thing you're trading here. So this progression here, and so you try to position yourself optimally, let's say, here in the region of this regressive move, to catch as much out of this piece of meat here, the fillet, if you want, out of this whole piece as possible, and to get a very attractive risk reward. And that's, by the way, something where then timeframes start to interact with each other. So what I usually do then is, if you say that this is the hourly chart, you said this is the hourly chart, well, you usually try to go down one time frame lower and try to optimize your position here. So let's give an example here. Probably that makes a little more sense. So let's just say we are 1 second. So the hourly chart, the only problem we have right now here is that the market is obviously in a downtrend. So we are obviously here in a downtrend in the DAX, and then the market started to make new lows and new high. But perfect, it works out perfect. Okay, let's just imagine the following. So what you can see here, for example, it's purely technical. So I'm not saying going short the DAX today, but what you see here is formal lows. Okay, so you see the structure here: falling highs, falling lows. Obviously, the market is obviously trending lower, and this right now here for around 1 month now. So what does the market do? Last Friday, we pushed below 12,300 points. So now the question probably occurs here: do you really want to short the market when we make new lows here? I don't think so, since the risk reward is getting very unattractive. What do I mean by that is the following. Even if you short the DAX here, 12,400 points with a break lower, or if you break it here, below 12,300 points. The stop, you have to place it here above around 12,600 points. So you have 200 points risk here. You have around 300 points to this level here. So the thing now is that what you try to achieve is you try to get a better risk reward here for such a momentum approach. Meaning the current move back here was something which somehow I think you could have seen it. The market broke to lower lows yesterday, even though it started to stabilize a little. So it wasn't such a dynamic move on the downside. And then, on top of that, the hourly chart formed such a bullish divergence here, somehow giving a hint that the momentum on the downside diminishes more and more. So what do we do here is we probably wait for the market to stabilize and pull back. And now pull back to a quite significant region before, which right now we're currently trading in. So what you do now, if you're trading the hourly chart, is the following. You go down one time frame here, and you look at your dominated time frame, which is in case here the 5-minute or the 15-minute time frame. So we'll have a look here at the 5-minute time frame. And so what we can see here is that obviously the market pushes higher from the lows yesterday, higher highs and higher lows. And now the question is, how can we position ourselves against the region, let's say around 12,300 points, very optimally? So therefore, what we first need to do is we need this structure to be broken. So from the morning onwards, we see a sequence of higher highs and higher lows. So obviously the DAX is trending higher. So right now, you just don't want to position yourself on the short side, since the current momentum should be clearly seen on the upside. Meaning that what we have to wait for is that this structure is broken, which happens here around 12,666 points. So if this happens, then what you try to do is the following, and then you try to position yourself in the current market environment, in the overall trend, respectively. You try to profit from the momentum. So if let's put it here, or let's put it here. Okay, so we can say it's 260 points. This is our key level, let's say. So what we wait for is that the market will probably break below this level. And if it breaks below this level, this is our short entry. So we wait for another attack at this level here, probably market pushing back from there. And then if the market really can in the first instance here hold this level, but then breaking below it, this is our potential short trigger here. So this is where we short the market. And this is the next thing. Where do we place our stop? We place our stop here at this level, so above the current daily highs. And here now the thing is, and this is how you could profit from the momentum occurring then you go to your traded time frame. In this case, it's the hourly chart. And from here you say, okay, what do we want to see? Obviously, we want to see this structure to keep, that structure is kept on here, meaning, or this overall structure with falling highs and falling lows is kept on, which means that you then say, okay, I take this level here, 12,600. It's a very, very easy, very rough approach, but nevertheless, we are only talking about the basics here. What we could say is, let's try the following here, and at least see a push towards 11,900 points. And that's how you could, for example, profit from a momentum approach here in this context. A trend, by the way, yeah, it's something we could discuss here, even though I think here from this momentum perspective, that makes the most sense, since usually what especially day traders try to achieve is low risk opportunities, searching for low risk opportunities, and then I'm trying to profit from them with a let's say high payoff ratio. So you want to achieve a high average profit in relation to your average loser you face when you face a losing trade. And that's in fact very, very similar to how I trade momentum strategies here. And this is, by the way, purely basic, so purely basic stuff. And something, well, we have now adapted it to the short side. You can easily adapt this to the long side too. So I was talking about here this green line, if you want, in terms of momentum trading. Trend trading itself is in fact quite similar, and by the way, highly profitable, I'd say. Something probably Stefan will show us here a little later, since it's not uncommon that you probably might have heard about make winners big and try to cut losers short, and the trend is your friend. So those two, if you combine them, it's no coincidence. So usually this is exactly what happens. So trends tend to trend and keep on and keep on developing, and you usually shouldn't fade this momentum here. And so in fact, that's then something where you could say, okay, what I do is I try to buy the dip to former lows. You could optimize your entry here the same way, and then probably just manage the trade here with placing your stops and trailing your stops to the developing relative, in this case, lows, and if trend don't trend, then to the relative highs developing. And in fact, that's it. So in fact, that's everything I have to say here. I think Stefan just wanted to give you an update here on the performance of the trades he just made over the last weeks, and also probably give you some statistics insights here in trend following trading approaches. So Stefan, please move on.
Yeah, thank you very much, Jens. And I will switch on my screen. Hopefully it works this time a little bit better than last time. And so here my slides should be. So that was really great input for us, Jens has reported, and maybe some additional comments from my end on that. What is, and Jens mentioned that already a little bit, what is typically for trend trading is that you need high risk-reward ratios. That means it's not always that ideal, like Jens showed in the chart, and especially on his own drawing, but because if it would always be, let's call it that easy, then we would have hundreds of winner trades. So you know from reality that the charts indeed looks a little bit more tricky, and therefore, of course, there will be loser trades. So the winners have to get the money even more than double, 3 or even 5 times, because there will be sequences of losers as well. So therefore, it will not surprise you that later when I present a trend trading strategy, that we end up with high risk reward ratios simply because only with those values we can survive with that kind of strategy. So let me go straight into it with the disclaimer we have had already. So I will follow up a little bit on trend trading without looking to the details of the structure. So my thinking is it's a perfect thing like Jens presented if you want to have a discretionary approach. But we can do something similar just looking to the trend itself. And we don't care about the best entry points. Of course, they are excellent as described by Jens, but we don't care about the perfect entry. We simply try now to get the best trends, and that's all. So we want to have those long-lasting trends within our trades, and that's what we are doing. So I go on a little bit straight, and then I will show once again a DAX, an Excel sheet, how to optimize such a strategy. And finally, as already mentioned, I will have some updates on what we have done already. Because, so you might remember we have had the DAX seasonal, and it's not a real seasonal in a normal sense. It has been a day of week seasonal, and we looked to power candles, and finally we went to open range breakouts. And since all those strategies are up and running, let's see how the performance looks like. So in general, why is trend trading such a good thing? Trend trading is, from a statistical point, that good because trends are another kind of deviation from random behavior. You might remember when we talk about our power candles that I mentioned most of the time, or what we see very often within the charts, we have this just wiggling around, going a little bit up, a little bit down, and everything more or less looks like noise. And even if you change time frame, yeah, it's always the same. So you can't identify any clear things. But if there are trends, that is another deviation from that random behavior, because it's obvious not random if you go into one direction more or less straight, even if there are those sequences of after a high, that there will be a next low, and then a higher high, and then a higher low. So nevertheless, if we have those long-lasting trends, that is definitely not random. And as everything which is not random can be food for us being traders, so therefore trends are ideal for that. And what we will do now is that we simply take an EMA, an exponential moving average, in order to look to those trends. And just to have an example here, just a second, let me switch here a little bit. So just a second. So I don't care right now about the specific underlying, so I take the first one here. Maybe I simply change a little bit the time frame. Now I'm on age 4, and what you see, there is now an EMA within the chart, and you can clearly identify with that EMA. The EMA simply helps you to identify those trends, but even without the EMA, you would do the right things. I use the EMA because later in the Excel sheet, we will purely trade the EMA. So in a sense, like, for example, here, where now my cursor is, we cross that EMA, and maybe we start a trade here, and then a short trade, of course, because we cross it from up to downside of the EMA, and then the trade would develop that way. Later you will realize, okay, there will be one negative point here, because if you see exactly here, we would cross the EMA once again. So that will be a next trigger point, unfortunately, to the north. And especially directly the next candle already will once again be to the south. So of course, here we will have a loser trade, and finally we get a good trend behavior here, and the trade will stop here. So, but before going really into the details, and this kind of strategy is simply called EMA cross strategy, but we have to use the right stop loss settings and the right take profit levels and the right EMAs. So if you count already, there are three parameters we have to take into account: the EMA period, stop loss, and take profit. Because in this case, other than a discretionary approach, we will not use the information of the high levels, or to say, okay, we put the stop loss here above the last highs, or whatever we will take here. So that kind of information, in principle, we could use that as well, but we want to do it even more simple, and therefore we will use percentage values for stop loss and take profits. So that's the way how we do it. And what we try to optimize is then, for example, the EMA period. So maybe I change now for 60 and ask myself, hey, would that sequence of trade be better or worse than the other one? And we will not do it only for one chart like here, where we finally would have maybe 5 or 6 trades. No, we will do it for a long history in order to identify the best parameters. And let me go back to my slide here. So it's all about identifying the right parameters. And now I will switch to the DAX because I know a lot of people like to trade the DAX, but what I present here is not only you can use for other underlyings as well, but that was a starting example. So anyhow, so once again, we develop here an approach on a pure statistical point of view. Therefore, since it's not a discretionary approach, we need absolutely fixed trading rules. So a clear described trading strategies, clearly described setup. If you trade something like that, you can still change it from time to time a little bit and apply other things for those trades as well. But at least what we do is we do it in a way that we have our setup and then do the backtest within our Excel sheet and try to identify the right parameters. So what are the trading rules here? And we have had those already a little bit within the chart. So we open a long trade if we are above the EMA. Okay, that is the first rule. And we do it vice versa if we are below the EMA. So that maybe would start now the first trade for whatever underlying. That trade starts, and we have a certain fixed stop loss distance in percent. So that would give us the risk of our trade, and first that risk would be in percent value. Finally, that would be the equivalent of 1R, the risk unit. That means, for example, if it turns out we have 1% of the DAX as a good stop loss level, so currently that would be 120 points. And now it's up to you. What risk value in euro or dollar or whatever currency you would assume.
Oh, I think we just lost Stefan, as I see it, if I see this right. So similar to what happened last week. Let's just see. So last week it played out. It played out okay since he was back after a few seconds, respectively a few minutes here. Okay, I think the last thing you might have seen then is that that he was discussing about the strategy here, and yeah. So and well, obviously now we're at my screen, but probably not the worst. So I've already seen the question here in the chat box. So from I'm not sure. Is it English or Naren? I'm not sure. I just hope that I spell it somehow a little correct here. So I see the VIX volatility index is at historic lows today. So yeah, it's not just that the VIX is at historic lows, but the S&P obviously is at a historic high. So we are opening here at the highest level ever. So around an all-time high. So the question obviously is, so what do you do out of this? So what do you expect? In fact, let's come back to one strategy we already presented. Stefan and I presented it, and you may remember it. By the way, I just do the following. 1 second. I'll show you something which gives you an idea of why the following approach obviously works, and is probably a great way to attack the, where is it here, and the attack the S&P every day. So here I've screenshotted this. So it's a screenshot from last week, and I still have it here. So it's the screenshot. I'm not sure. Can you see this, or can we zoom in this a little? So probably that's making it a little better. Yeah. So I think this should get the job done. So what you can see here, this open range breakout approach is working really well over the last year. So Stefan backtested it in Excel here till 2010. So November here. You started out in November, as you can see here on the left. And so it's obviously having a very positive expected value. So overall, it makes money if you trade this approach. And by the way, I can give you here this data. What are the parameters of this approach? So it's the same framework, if you want, as the strategy Stefan just presented in terms of the EMA. It's the same approach. So you have clear defined rules and you just trade them. And in case of the of this open range breakout setup, for example, it's that you identify the range. In our case today, via the 10, 15-minute exponential moving average. If we trade above it, we go long. If we trade below it, we trade short, if the trade is triggered. And then we have to wait, and this is something we still have to wait for another 40 minutes now, 5 minutes after the open of the US markets. We define the open range here between 1:30 p.m. and 2:15 p.m. GMT. And then we trade the break of the open range in direction of the identified range. So if we are trading above the EMA, the 10 EMA here on a 50-minute time frame, we trade the long side. If we trade below that, we trade on the short side. And that's it. So this is the set of rules we just formulated. And as you can see here, this is obviously playing out really well. So you see some pullbacks here in the equity curve, but all in all, it's a very, very profitable trading approach. And as you can see here, with those numbers, the average profit was 106, while the average loser was 0. Is it 82? Is it 62? I think it's 82. Yes. So the payoff ratio, you can calculate this. By the way, it's 1 second. It's 1.3 to 1 here. And with a win rate of 47%, what you get is a positive expected value of around 0.9. What does this? I'm sorry, 0.09 that way. So what does this mean? It nearly means that for every euro you risk here, every US dollar, every pound you risk, you'll at least make 9 cents per trade, so around 10 cents. It doesn't look that much, but if you accumulate this and you look at the number of trades, you have to understand that the expected value tells you you're doing this on every trade. It doesn't matter if you're making a profit or if you're having a profit or a winning trade or a losing trade. And that's in fact something which then means that, for example, if you're risking, let's say 1,000 euro per trade, you're making 100 euros, and it doesn't matter if you're a winner or a loser, but the expected value is positive, so you're still making money. So this SAT means that you can generate a very, very high profitability with this trading approach alone. And so what we now do is the following, and this is, by the way, something where the discretionary approach then comes into play. By the way, now it's getting interesting. Let's just see what happens here. So obviously the market is opening sharply above the highs from yesterday. So from a pure technical standpoint, we have a clear defined setup here, and we have, if we trade above the 10 EMA here, exponential moving average, we have to trade in direction of the trend, if you want. And in this case, we have to trade the long side here. That said, it means even though we are trading at all-time highs currently, we have to go long. So now the problem is, and this is where my personal discretionary approach comes into play. So while I'm fine with trading here in direction of the overall trend and on the long side, even though I have to say the market looks really extended, especially if you look here at the hourly chart, by the way. Here, so this is our direct dominator. You may remember what I just said. Here's the open, by the way. So you have to here. And what you can see is that the market is obviously trading at a very elevated level. And it's not just a very elevated level, but it's also that we are about to enter this so-called distribution area. So that said, I'd somehow reduce the position size. Even though I'd go for the setup itself, I nevertheless would reduce the position size here and then say, okay, let's say if I usually risk 1%, I'd go down with the risk to, in this case, 0.5% or something like that. So reduce the position size to somehow avoid to face a too big loss if the market moves against me. So nevertheless, I still go with the setup, meaning if I have a clear set of rules and fixed rules, I just have to go with this trade in this case, which, by the way, we have to wait for, since the moment here we are trading below the 10 exponential moving average. This could result in triggering a short setup. So it could be that we are anti-cyclical short here based on our fixed set of rules. And yeah, then let's see whether we'll have a winning or a losing trade. By the way, still Stefan, I can't see him. So 1 second, I tried to contact him here. Okay. Oh, now I can see him. So that's kind of funny because I just asked him here via Skype, are you online? Are you still online? And he just answered no. And right this moment, I see his picture here. So Stefan is back, I think. 1 second, I'll have to see it here. So Stefan? I'm not sure. I think he just opened his screen.
So I'm back here.
Yeah, they should be.
So now it works again. So we have still the DAX sheet here within Excel, and hopefully we have the connection until the end of that webinar. So Jens, just write me a note, please, if it looks for you quite well and that everybody can hear me, because I cannot check that simultaneously. And I simply hope that it works. So yeah, but it should. So okay, I go on that we touch the topic of optimization, and we can do that simply by computer power. And within Excel, you can use what is called the solver. And that means that you click on what you want to try to optimize, and then you press that button, solver. And the good thing is that now the computer is doing all the stuff. So it changes the numbers for EMA, stop loss values within a certain range, which is mentioned here, or you can type in. And then finally, you get that optimization done by the computer. And look for the results we have here, for example, within that Excel sheet. Now it looks really well. And you might remember those numbers: EMA 290 and stop loss 0.6% and risk reward ratio of 13. So that is something now done simply by the computer itself. We can look simply to the results. So it's a good strategy. During the last couple of months, or maybe a little bit more than 1 year, it does not perform that well, but those phases happened at other points in time as well, so it's not untypical. And you see that even having that low win rate of only 13%, we have a quite profitable strategy. So it's a very good concept just to have an EMA as a trend following filter for your trades, and then going with that trend with a more or less tight stop loss and a high risk reward ratio, and then you get good sequences of trades within that strategy. So that's great. So what I promised is that I not only will present a new strategy here, and you still may write down the values of EMA, stop loss, and risk reward ratio for that one here, but I promised that we will have an update on our performance of what we have had in the webinar, in our previous webinars. So we go through DAX seasonal, power candles, and open range breakouts, and we'll present all of them. So let me see which one will be the first one here. So let me start. With.
Okay, no, that was that was right at the moment. Right at the moment when by the way, can you see my screen here? Yes, right at the moment when it was about to get really exciting for several for us all, by the way. What I know is definitely that the DAX seasonal is working really well. So for around 2 weeks. That's definitely something I can already tell you right here. Yeah, just let's hope that he'll be back very, very, very soon. So yeah, let's just take over here the thoughts about the open range breakout. So what you can already see here is that it's still too early to formulate a trading approach here, or to formulate a setup. So we still have to wait another 30 minutes. And by the way, also something which is kind of interesting in terms of this presentation in general. So what you can see here, for example, is the following. So what we will now try is we probably try to formulate another approach here. So some of you might be a little careful, and definitely are probably right to be careful here, to say, well, even though we probably get to see a short trade here, short setup, do you really want to short the S&P here on such a high elevated level, especially with the VIX being that low? I mean, that's definitely something, and when you say the trend is your friend, you should avoid. And so in fact, that's definitely true, even though you have rules to stick to them. And if you look at those numbers here, I mean, at the end, you'll come out ahead. So you already know that you'll come out ahead, which gives you a high level of confidence in trading this approach. And even though I can fully understand that emotions are already and always play a very important role here, and some might just say, well, I just don't like to short the S&P at this level. So nevertheless, you now wonder, okay, but what is probably an interesting level to go long? Since if you look at those elevated levels, do you really want to go short here? I'm sorry, do you really want to go low here, or is it probably a little too high? The levels are a little too elevated here to go long. So my personal approach here is that I look for crucial levels in the chart. So you may have heard about this. Is, by the way, I don't want to discriminate against anyone or something, but there are plenty of technical analysts out there, traders out there, who publish research articles, and who are talking about lots of indicators they're using. And sometimes you look at those charts and you just think, wow, this is really colorful, let's call it. Okay, and then especially beginners might say, well, hey, I need that much lines in my chart too. So look at the framework Stefan just delivered respectively. Look at the framework here around this open range breakout approach. It's just 3 steps, and you don't need any indicators to this, but you only need to have a clearly defined range in a certain time frame. You have probably one exponential moving average, and that's it. And then you just have a clear set of rules saying, okay, I go long in direction of the identified advantage, put the stop below the intraday low, and that's it. So, and that's the thing where I say, well, what I look for, especially when looking for such momentum strategies, looks as if Stefan is back now. Let's see. But let me just finish this thought here. So what I look for then is objective lines in the chart, meaning I look for lines and numbers other market participants definitely have on their agenda too. So the market open, for example, the market close of the day before, the daily high, the daily low of the day before, monthly highs, monthly lows, weekly highs, weekly lows. But these numbers are there's no room for interpretation, but you have those numbers: highs, lows, weekly highs, weekly lows, intraday highs, intraday lows, and so on. And this is something I look for. So in our case here right now, what I would do is, for example, if I plan to trade the momentum, I wait for the gap close to happen, and I go long against the highs from yesterday. So obviously the market didn't make it above those highs, was capable of making it above those highs here during European market hours in a thin market environment. And that means yesterday they weren't able to make it above this level. This is a resist, and now former resist becomes a support, meaning that if we pull back here towards these levels around 2,470 points, I consider this, for example, to be an interesting long trigger and go long from here, probably expect the market to then trend higher into the daily close, so intraday close. And now, Stefan, please take over again.
Yeah, thank you very much. The point is, I'm not sure what was the last thing you saw on my screen. So maybe you can tell me about the strategy which has been online last.
Okay. The last thing you were talking about was, or what we heard was, you were about to present the
the performance.
Okay. You were about to present the performance of the, I think, DAX seasonal. That was the first thing you planned to present.
Okay, so let me see. So I went already down the road, and here we are. And hopefully it works still, that we go for the DAX seasonal. So developing quite well. And you remember we started at 2,000 euro. Now we are at 2,100. Right now we have a long trade open here, and the overall performance is really developing great. Let's look for the results, and then we can get the equity line here. And that is the equity of that kind of strategy. Just talking, just trading the DAX according to the day of the week and the relationship to that EMA period, which is about 40. So that's one strategy. And let me quickly check whether I'm still online. I am, so that's good. So that is one strategy, and there are other strategies we presented here. And since time is moving on, let's go first here. So I have one strategy which is quite similar to the open range breakout we talked last week. In this case, it's trading the DAX and the S&P 500. And here we have a performance even in the positive region as well. But not that huge if you compare the numbers percentage-wise. But we are in the profit region, which is very good. And we have two other things during our one other strategy that was power candles developing well as well. That means we are in the plus here even for that H1 strategy. You might remember when we have had that strategy as a main topic, H1 was in the minus. Now we are profitable. And finally, the daily variant of that strategy is performing very well. So about 6% now in the plus, and all within 2 or 3 months. So performance update looks very good. You see that what we talk about is really what we trade. And I think that is something all webinars should go for, that we have real trading activities or trading strategies which are really traded in real accounts. And that is what Jens and I'm doing. So that's my personal summary up to now. So go ahead, Jens.
Okay, yeah, perfect. So what shall I add here? By the way, I just switched over to the DAX. I just wanted to see how it performs here, in terms of the S&P coming in a little weaker. What does a little weaker means? It means that the S&P is obviously about to close the gap here, and then yeah, the question is, where is this weakness in the DAX currently? I think the main reason is that the euro is about to now go for the highs of August 2000 and August 2015. And if I saw this right, and if I look at how the US dollar is performing here overall, okay, dollar yen, not necessarily, but it seems as if right now probably markets are anticipating some weaker numbers about the consumer confidence about to come in around 5 minutes. Not sure if this will work out or not, but this is mainly the main driver for the weakness here in the DAX, and why the DAX can't really find some further momentum here on the upside. Let's just see. I mean, I'm not sure. I'm not really. I'm not. I don't know. Somehow something tells me that we're probably get to see a further extension of this corrective move here. And that probably the S&P, not the S&P, the DAX will push a little higher, probably push us up towards 12,400 points in the next few hours, let's say, also taking into account the trading days tomorrow. And nevertheless, that's the funny thing. So we'll nearly end this in a nice way here. So Stefan already presented to you. I think that I think you can perfectly understand why the series of webinars we had here was called overall Discover Tactics of Discretionary and Quantitative Pro Traders. So even though you might have somehow quantitative approach here, which generates trading signals for you, in my case, for example, means that nevertheless there's still some discretionary touch to it, and adapting setups, respectively, going a little more aggressive with a stop, for example. Let's say you have an approach which says go long at the beginning of the trading day and exit the trade at the end. For example, DAX seasonal. That's a perfect example here. And nevertheless, you can sometimes you just feel the market structure if you carefully watch the price action for a quite long period of time, and at the end, okay, the basic strategy runs well and generates a positive expected value, even though with some special techniques and getting more aggressive with a stop, for example, especially if a market moves your direction, you can somehow try to increase the expected value and make the profitable strategy even more profitable. And that's something which is somehow, I think, a very, very interesting and also good approach to go for when trading. I'd like to end this series here with one thing which every trader should definitely remember, and that was, by the way, I think the main motivation behind this. And I just hope that you really got to this point. You need a trading strategy. So you need a strategy with a profitable, general profitable trading strategy with a positive expected value. If you don't have this, you have nearly no chance of surviving in the markets. And this is something where you should start when start to trade the markets, respectively, when before you even start, that you do some enormous research activity and backtest ideas here based on a certain set of data. Stefan presented already during the series several websites where you can get enormous amounts of data here, which you can then analyze. And based on that, you're looking for a profitable trading approach, which will make you money. And over the long run, probably you're capable of even optimizing this approach with your discretionary touch or with your trading skills in general, and make it even more profitable. But overall, what you should aim for, I think, is that you should definitely look for and work out a trading strategy which has also in the basic version already a positive expected value. And this is the point where then you should start your trading from. Yeah, and so that's it from my end. Nothing more to add here. I always wish you happy trading and watch your stops. Talk to you again tomorrow at the morning meeting at 9:30 a.m. GMT. Yeah, so Stefan, up to you, the final words.
Okay, I'm here. Yeah, I would like to add something to what you already mentioned about trading and all, and trading in general. There will always be the time that you will have sequences of losers. There's no trading account without those sequences. That is always a good point in time to remember to your research you have done. Because if you look to equities of the history, then you will always have drawdowns, so those kind of sequences of losers, always within the developing of that trading strategy. So what you have to do is you have to compare your own trading account, your own results with what you have developed over the history of data, and don't be too fast in changing your mind. Hey, strategy is not running anymore. To come to that point is valid, yes. And there will be points that you say, no, strategy is not anymore good. But be careful. Look long enough that to the history you saw before, and that you see how the strategy performed in the history and what kind of drawdowns you realize there as well. And since they come, it's definitely the right thing to revisit your developing every time or from time to time, but don't switch too often from one strategy to the next one, because then you might finally go down the road that you always stop your new good strategy because of a few losers. On the other hand, just to check everything from time to time is good as well. So overall, I think you learned a lot during those 4 webinars. I hope that you enjoyed it, and that we will see, or better listen to each other once again, wherever that might be. Jens mentioned already the morning meeting, and there are other webinars from Jens and from myself all the time. Just check out and you will find webinars and additional content, additional input for you. And that is something we have all to do, learning all the time. And that's what we have to go for. So for me, it was quite nice to be here and to have so many listeners to our webinars and recordings of those webinars. So have a good time wherever you are. And it's now the time to say goodbye. Bye-bye.